What's going on YouTube? Mark Fleetwood here. Welcome back to the Daily Grind Trader. Today's video is going to give you a precursor to what my next series is going to be. I'm going to be going over everything I can based on ICT concepts, starting with just a glossary of terms, making sure that you understand the terms that I'm using, what they actually mean and how they are applied, and examples of all these terms being used, examples of different models, different entry models, different ways to trade, different ways to use ICT concepts. That being said, today I'm actually in a position trading the S&P 500. I'm going to show you exactly how I came to enter this position, where I'm at so far, profit or loss, whatever the case may be, and just kind of go over step by step how this entry happens. And please, if you see this and you want to know more, give me a comment. Let me know, because I really want to do this series, but I really want to make sure that I do it properly and people really want to see it. What I'm looking for right now, I'm looking on the daily on the S&P 500. So what I noticed is we have the previous day high and the day prior to that low made a fair value gap. So I'm looking for that fair value gap to get hit and then to get rejected. Obviously we see that happened. Now what I'm also looking at is the fact that this daily candle here broke through liquidity and actually went and kind of dove down to a new low. So my idea now is that we reached for the buy side. We failed so far to get it and hold it. The idea now is that we will reach below the sell side of the previous day. Now it might not happen today, it may not be tomorrow, but by the end of the week I expect that we will see a low, at least a wick below 41.87. That's the expectation that I have, just using price action analysis and the fact that the general overall bias is bearish. We're making lower lows, lower highs, lower lows, lower highs. So the price action, the daily bias is bearish. We've reached for an area of importance at a premium. So this is at a premium price. So we reached up, we've gotten into that area, and now I'm going to go and we're going to dive down into the 5-minute charts. So in the 5-minute charts, you see this range. Now I'm going to put on my indicator just to show each session. So this is New York lunch from yesterday, New York PM from yesterday, Asian session, London high, London low. So this it's an ICT add-on. It's an ICT indicator. It just shows you the zones and shows you the session. We see that this fair value gap between these two light blue lines was created on the New York lunch high yesterday. So today, what do we do? Today, price ran up, took that high, and then made a strong move down. So what I'm looking for is we have our most recent low prior to that. So made high, made a wick low, high, came down and displaced below this. Got very strong movement down below this. Now with that, there's two things that you have to see. With displacement came a fair value gap. This fair value gap is right here. I'm gonna make this light blue. But what also happened is this previous low here, these two candles here that made this low before shooting up to take that liquidity, this would have been an order block. This would have been a bullish order block had it held, but it didn't hold. So now this becomes what we call a breaker block. So this is a failed bullish order block, now becomes a breaker, now should become a resistance. The model that I'm using here is called the unicorn model, because you have two separate triggers aligning inside of each other, and that's where you put your entry. So my entry for this was a short position here at the breaker block, or at the fair value gap inside the breaker, with my stop loss right at the top of the high. And my target right now is going to be targeting this first low or this second low. These are the two lines that I drew out, the two liquidity lows. So either one of those can get hit, either one of those can be a target, but I'm going to manage this trade because this is likely going to hold throughout the rest of the day into tomorrow. So I'm going to manage this. So before the markets close today at 4 p.m., I'm probably going to pull a substantial amount out if I'm in profit. If I'm at least 1.5 or 2 to 1, I'm taking at least half out. Put my stop loss to break even and let the rest ride. So right now, you see it looks like we're kind of making a retrace, but we're retracing to an area of interest. That singular green candle here, that singular green candle be an area of interest. If this holds, it should fall back down, or a fair value gap to see a continuation to the downside. So right now, there's nothing on this price action that is scaring me into thinking reversal. It would need to displace above this and above this fair value gap. Then I might get out. Then if it displaces above this fair value gap, you know, it would suck. It'd be a little bit less than the 1-to-1 trade, but I'd be out and I'd look for the next potential entry. But what I truly believe is going to happen is we have a small retrace, come back down, small retrace, and we're just going to have a regular up and down zigzag, you know, like this, up, down, up, down, up, down. So price never runs one direction only. So I want to show you this. I want to show you this model. I want to show you this entry for today, guys, because I am not good enough at talking, at keeping interest to film my training sessions and keep you guys interested. I could film for an hour and you'd be out in like 37 seconds. Like, dude, this guy sucks. This guy is like watching paint dry. But if I can do it in these quick little bursts and just show you as I'm in it, once I enter the trade, show you why I'm in and you know what's going on with it. And I don't mind showing you here. I am in the trade at the levels that I mentioned. I'm currently in a decent amount of profit, but you know, we will see what happens. I risked 0.75% for potentially a 3% or 4% gain, depending on which way, which target hits, and if there's a reversal printed somewhere. If it comes down here and makes a strong rejection, then I stop out here, or it can come all the way down here. So guys, that's it. That's the video for today. I hope you enjoyed, and actually look, it looks like we might be starting to already push off of this. So follow this trade if you like, follow it, see how it would do. And again, please comment, let me know below if you want to see this whole series on all the ICT concepts, all the terminologies and what exactly they mean in examples of each. So anyway guys, as always, until next time, peace.